Hi, Lee Phillips here. I'm an attorney and I want to talk to you for 2 seconds about LLC tax benefits. Limited liability companies, and they're not limited liability corporations, they're limited liability companies, are a relatively new entity in the United States. And one of the neat things about an LLC is you get to tax it however you want it to be taxed. When Wyoming created the LLC in 1977, one of the first questions was, Mr. IRS, how do you want to tax this thing? And we didn't know how they were going to tax it. We thought they may actually create a new whole tax code around LLCs, like Subchapter S. Maybe we got Subchapter T or whatever it was. And it took the IRS in standard IRS fashion 20 years in 1996 to come back and say, we don't care how you tax it. You get to choose. Check the box. Do you want it taxed as a sole proprietorship? We call that a disregarded entity. Do you want it taxed as a partnership? Now you got to have more than one member, more than one owner of the LLC to have a partnership taxation. Do you want it taxed as a Subchapter S entity, like a Subchapter S corporation? Or do you want it taxed under Chapter C, like a C corporation? So you get to choose however you want your LLC to be taxed. The benefits, well, there aren't really any. Because if I choose a taxation structure under Subchapter S, I get whatever benefits Subchapter S gives me. Partnership, whatever benefits partnership gives me. So I can't say that there are specific tax benefits to an LLC because it depends how you're going to have it taxed. Now, I will tell you that if it's a disregarded entity, you're going to file a Schedule C, just like a business that's a sole proprietorship. And I will tell you that a Subchapter C, a Schedule C business is much more likely to be audited by the IRS than a Subchapter S or a partnership. So for that reason, I might like a partnership or Subchapter S. The point of the matter is it depends on how you're going to make your money. If you're making your money as what I'm going to call passive income, like rents from real estate, you're going to have it taxed under a partnership or a sole proprietorship disregarded entity. If you're selling goods and services, then you're going to have it taxed either as the sole proprietorship, file the Schedule C, or you're going to have it taxed as a Subchapter S entity. And that gives you the ability to get the benefits of a Subchapter S, where you pay yourself a reasonable salary and then distribute the rest of it out to yourself, which makes that distribution so that it's not subject to Social Security, FICA, that sort of stuff, the 15.3%. So that gives you an advantage if you have earned income. If you have passive income, it's not subject to that anyway. You might as well have it be taxed as a partnership or the disregarded entity. But like I say, partnerships, Subchapter S, they have a lot less chance of being audited than a Schedule C business. So benefits, retirement benefits, health benefits, HSAs, HRAs, 125s, all of those sorts of things, it depends upon how you have it taxed. And frankly, those are basically available to each one of the taxation structures. So how you're going to have it taxed, I don't know. Now, don't forget to subscribe. And by the way, I've got a cool ebook out called 10 Tax Tactics. And the goal is to cut your taxes by 20%. So get the book and don't forget to subscribe and give us the likes and ding the bells and whatever else they do on YouTube. Lee Phillips talking about benefits of an LLC taxation.